Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky, a Vancouver-based realtor, online at stevesaretsky.com. Welcome to the show, Steve.
Yeah, no worries. Thanks for having me on.
Steve, can you tell us a little bit about stevesaretsky.com?
Yes, it's essentially just like basically a homepage where I basically chronicle and write a lot about the Vancouver real estate market, a little bit about the Canadian real estate market and the economy, or at least my thoughts on it anyways. Try to keep everything fact-based and let people sort of interpret it how they see fit.
What's happening in the Lower Mainland real estate market, and how did we get here? That'll get us going for a while.
Yeah, I have to unpack that. So, I mean, I think that everybody kind of knows where we've been. I think a lot of it was, we've had historically low interest rates for the last decade. Canadian households are leveraged up. They're the most indebted household in the G7. So I think that's well known. So households have certainly been borrowing money, on the backs of low interest rates. I think we also had a large stimulus and outflows out of China in 2015, 2016. So that kind of got the party started. You had a lot of locals that, saw what was going on. Prices were ratcheting higher. And generally, in markets, right, higher prices beget higher prices. Kind of created a positive feedback loop and, seemed to drive prices up. In some areas, we were seeing prices rise 30, 40% year over year. And now what we've seen over the last really 18 months, 24 months, as you saw the high end really peak out about 2 years ago, and then that's slowly started to trickle now into the condo market, where since June, if you want to look at the official MLS benchmark, condo prices have declined 6% since June, and they have detached prices down 7% since June. I would say that it's actually a little bit more than that, but that's your official price metric anyways from the real estate board.
If someone is planning to sell right now, do they have to bite their tongue a bit or bite their lip and say, yeah, I have to put out a lower price?
Yes, particularly in the detached housing market. I think what we're seeing is it's the typical psychological effects of real estate, and that's why it's such a slow-moving market. It's not like the stock market, obviously, where you can look at one chart and determine what the price is. What happens in real estate is people get emotional. Price discovery is very difficult. No home is the same as another home. And so what happens is generally, and there's been studies on this, is what happens is real sales volumes generally peak out 2 years ahead of, price declines. And so that's kind of what we saw in the detached market, is volumes peaked out a couple of years ago. And now we're really starting to see, prices move, much quicker to the downside. And so a lot of sellers are basically stuck at previous prices. They're stuck in the past, and they're having a tough time adjusting. And some sellers are just continuously, they might be cutting their price ever so slightly, but they're just continuously one step behind the market. And I think what happens is a lot of these sellers just end up chasing the market downwards. So if you want to get ahead of that, I think particularly in the high end market, you pretty much have to set the new price. You have to basically get ahead of the market and say, okay, well, prices are look to be going lower. I need to get ahead of this, and that's where you need to price your home if you want to move it.
When did the real estate market top on the Lower Mainland, and how long could it take to bottom out?
I think there's differing views on that. I would say the luxury detached housing market basically peaked out in the spring of 2016 from a price perspective, and from a sales volume as well. And for the condo market, even though sales peaked out last year, price-wise, they peaked out in about March 2018. And since then, they've been on a slow trajectory downwards. So it's hard to, figure out or determine, what the bottom is going to be and how long that takes out. I mean, if we look at historical context, we could look at the United States. Obviously, the two markets are different, but sometimes these real estate slowdowns take a lot longer than people anticipate. So, I think a lot of it will come down to government policy, how they, determine if they want to interfere in this cycle. But it's definitely a prolonged, 20-year bull market. So, it's tough to sort of go against it, but there's certainly be a lot of headwinds right now.
Is the Lower Mainland unique in the fact that about 45,000 people a year move to the Lower Mainland of BC? Does that put pressure on prices?
Yeah, I mean, of course it does. The population, migration does. I think that, nothing goes on forever. And so I think that's kind of what we're seeing is a lot of these influences are all correlated, in terms of, Ray Dalio actually put a piece out on this, on sort of debt crises and how these housing cycles tend to function. Is what happens is you get, the rising prices, spurs credit growth, it spurs, wage growth. And what happens is because of that, you get a lot more migration, into the province, people looking for jobs, tight labor market, and that just sort of compounds on each other. Basically, one man's income is another man's spending. But eventually the credit cycle starts to unwind, and then it sort of starts to reverse. As we're seeing now in construction, our housing starts in Greater Vancouver peaked in 2016. They're still at very elevated levels, but they've now declined for 2 consecutive years. So the construction sector, is going to start to slow down, as we're seeing in housing starts. So that will probably result in some layoffs in that sector, probably in the coming year or two. And, with that, it'll be interesting to sort of see how that works on the economy and if that starts to slow down some of that migration, because that's historically what we've seen is you get a lot of non-permanent residents coming in here looking for temporary work, and a lot of that work ends up in the construction space.
Are the people who lined up to buy expensive condos in places like Langley a couple of years ago kicking themselves now? Did they pay too much, or if they hold on to it, they'll get their money back?
I think the construction, the pre-sale space is probably the most fascinating space to watch. I think if you're going to watch anything about the real estate market, it would be the pre-sale space in 2019 and likely into 2020. I think what's happened is you had basically the developers were paying a lot from the land prices, and people were just expecting prices to continue to rise. So what happens is developers were charging well above market, market value. They were saying, hey, this condo is going to be ready in 2 years, so we'll charge you a 20% premium. So, by the time you close, you'll be golden. And so people were more than happy to pay that, lining up and camping out just to get access to the pre-sales. But what we're now seeing with prices not only flatline but declining, is all of a sudden it doesn't really make much sense to be paying a market premium. So the pre-sales have really slowed down. And people that bought them for speculative purposes, trying to flip them at a profit, are having a tough time because buyers right now are not only cautious, but they're not really interested in buying a piece of paper, which is, the rights to your pre-sale contract. They're much more inclined to go to a resale unit that they can actually walk through, look through, get a feel for than some, uncompleted unit. So I think people are having a tough time flipping those. I've seen some people, depending on when you bought it and which development, are selling at a break even or at a loss. But there's certainly still some profit to be made there as well. It depends on really, again, where you bought, but it'll really depend on how the market moves in the next 6 to 12 months to determine, if those losses start to stack up.
We'll have more with Steve Saretsky right after the break.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerVan Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Steve Saretsky. Steve, has the real estate narrative around the coffee shop table changed any? What are people talking about?
I mean, it's definitely died down. I'm sure you can probably attest to that too. You know, it seems a lot sort of like the Bitcoin mania where you couldn't get through a conversation without somebody talking about real estate or Bitcoin at one point. Particularly back in 2016, you know, every family dinner was revolved around real estate and how much people, you know, how much money people were making and the crazy bidding wars. Whereas now, yeah, it definitely seems to have died down. Yeah, in terms of the realtor talk as well in the office, it's, yeah, I just don't know if there's that same euphoric mentality. I think a lot of people are really looking to see, this year ahead, because I think we're definitely in a transition period. And so everybody's, some are optimistic for the spring market, which I think is going to be a telltale, direction.
Is psychology an important factor in real estate markets on the way up and even more important on the way down?
Yeah, I think so. I'm a big researcher and student of a lot of the work that Robert Schiller's put out. He's written a couple books on it, one of them being Irrational Exuberance. Talks a lot about, you know, the role that the media plays in creating the hype and the role that the media creates on the way down, which is a lot of negative headlines. And most people that aren't really active in the housing market, you know, most people don't really know what to look for. So what happens is you just get the average person will basically just read a headline. And so as the headlines become more negative, as we're seeing in Vancouver, such as an 18-year low in home sales, that's hard to really paint like a rosy picture. So I think that, that negativity tends to weigh on the psychology. And so that'll be interesting to see how that compounds, things moving forward.
How do today's interest rate increases compared to the rate increases of the 1980s?
Well, I mean, it's a much different environment. I think what I find interesting is, you know, people are always quick to say, well, you know, hey, you know, the Bank of Canada rate's still only 1.75%. It's still incredibly low. But if you look at it, I mean, rates have more than tripled in just over a year, right? We went from 0.5 to 1.75%. So, I think, and then you have to look at the magnitude of the debt. We have, you know, the highest amount of debt we've ever had. So when you're effectively tripling rates, it does matter. So yeah, I think you have to look at that aspect as well.
A lot of inventory's been built the last few years, yet sales are at record lows. What does that mean for the underlying market?
I would say it's still kind of a tale of two markets. Right now you have the detached housing market where inventory's at a 6-year high. And the condo inventory is still quite low, but it is building because it's coming off a record low last year. We've never seen that little inventory. And so right now it's starting to build, in Greater Vancouver. I believe it was up about 85% from last year. So it's growing quite quickly. And a lot of that is not necessarily from people panicking to sell and flooding the market with new listings. What we're seeing is just the sales are so weak, as we saw 18-year low in home sales for the year, where inventory is basically, you know, becoming stale. It's backing up, and it's adding to the inventory. So, and then again, I think the big thing to watch moving forward will be a lot of the pre-construction. We had record housing starts in 2016. A lot of that will be completing in 2019. So I would imagine you'll probably see a record high completions in 2019. So that will certainly add to the condo inventory supply.
We always talk about location. Are there some areas where condo development will probably still stay very positive and probably profitable?
That's a tough one. I think, location, I think the east side of Vancouver, from what I understand, is still pretty tight. There's a lot of local demand there. People have basically been priced out of the west side and moved closer to the east side. So But I think it's all relative. I mean, it really depends on the magnitude of the slowdown. It depends from a development standpoint when the developers bought the land. From what I'm hearing within the development community is, if you bought in the last 12 months, it's unlikely that you'll be able to build on that land just because the price that you paid and the fact that the land prices are not only declining, but so is the resale market. So it'll be very tough to make the numbers work. So that, either you have to hold it out for a number of years or you try to sell the land likely at a loss. But again, if you bought, 2016, 2015, then from what I understand is they're still moving ahead with, development.
We'll have more with Steve Saretsky right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Steve Saretsky. Steve, with the implementation of a number of taxes targeting foreign owners, are foreign owners of Lower Mainland real estate beginning to sell and move their money out of BC?
There's still some buying. I would say, to me, anecdotally anyways, it feels more like it's a net selling versus buying. But I think this is not necessarily exclusive to just Vancouver. The Chinese demand for real estate has slowed significantly, not only in China and their own country, but you can see Hong Kong's property market has really started to beginning stages. It looks like beginning stages of rolling over. Australia is a very slow market right now. Seattle's slowed down. So a lot of that, I think, has to do with the global credit cycle, winding down, and the slowdown in China, I think can't be underestimated. So, but again, when you add a 20% foreign buyer's tax, that probably doesn't help either.
Do you think it's the wrong tax at the wrong time, considering the market's turning down? Maybe we would welcome those sales now.
Yeah, I guess it kind of depends on one's perspective or one's position in the real estate market. I know certainly there's quite a few people out there that wanted the NDP in and are cheerleading a substantial drop in home prices to get back to some level of affordability. Whereas others, especially specifically in the real estate industry, obviously, want the party to continue. So, I think the provincial government, it was pandering to the voters. That's what people basically wanted. I think people were upset with the position of the housing, and so. But I think it was, the horse had already left the stable at that point. The market had already peaked out. But I think that's such a politically hot potato where I think it comes down to to the person. But certainly, if you're looking at the luxury housing market, it's depressed as anyone can tell you. You could look at, West Vancouver. You're down easily 30% from the peak. So,
what is the LIBOR rate and how does it affect the mortgage market?
It's essentially like the, overnight rate, the banks basically lend to each other. So basically I think it's just more of a measure of liquidity. So we saw that start to pick up in 2007 leading up to the financial crisis. So it has picked up in, the last six months or so, but, it's still quite low from historical context. But, from a mortgage funding perspective, I think it's interesting to look at what's happening with a lot of the flat and inverted yield curve here, particularly in Canada, where basically, you've had your 5-year bond yield, which is historically correlated with the 5-year mortgage rate. That's plunged from about 2.5% down to 1.8% in just over, 2 months. Despite that, banks have not moved at all on their 5-year fixed mortgage rate. So I think a lot of that has to do with the increased cost of funding And I think potentially even a little bit of a risk premium in there, given where the market currently is at.
Why do realtors accept listings that are way overpriced for the market?
I think a lot of it is just from a marketing and branding perspective. They just want to get their name in the front yard and have the sign up, and then hopefully they can coach people down into price reductions to actually get the property to sell. But yeah, again, what we're seeing is sometimes they just take these overpriced listings, and it's not even in the ballpark. Specifically now, where you have to be really ahead of the curve, it's difficult to coach people down because everybody's so emotional about what they feel their house is worth, and in a quick changing housing market, you have to adapt, and ones that need to sell are having to adapt and obviously sell it at a discount.
Sure. I mean, your neighbor sold their place a couple of years ago for 2.7. It's hard to accept less than that, isn't it?
Yeah, exactly. And everybody is so ingrained that Vancouver's done nothing in 20 years but go up. You have the odd 6-month dip in 2008, a tiny little blip in 2012. So it's kind of created this mentality that, any correction that we have here is going to be short-lived. And so, I mean, again, that'll be something to watch moving forward, because I think this is, as we've seen already, an 18-year low in sales. This could signal, I think, something much more significant than we're used to.
A number of presale condos are due for completion this year. Are some of those deals likely not to complete due to the real estate market downturn?
I think that's part of the reason why I felt 2019, 2020 is going to be presale is going to be the space to watch, because a lot of buyers that buy the presales, they go in without representation. They don't necessarily understand that what they're buying is essentially a futures contract. Even though the bank might tell you today that based on your income and everything, we'll be happy to lend you the money. But what happens is, as the banks are getting tighter as they are now, and the value of that condo drops, and if it's not worth, what you paid at the presale center, there's going to be basically a shortfall there. So it's going to be up to the buyer to come up with that shortfall. If the bank deems, when you go to close, the bank is going to appraise the unit, and if they feel it's not worth what you paid, then you're stuck kind of trying to find a couple extra bucks.
Is the selling price recorded when presale condo deals complete, and could this affect sales and price stats?
No, that would only be recorded in the land titles office. So that would probably impact, I'm not sure if that would impact some of the bank's price metrics, but it wouldn't affect the actual real estate board's price metrics, because most of those presales are sold offline in the presale development centers, and then once they close, they'll just register in land titles. But obviously, the ones that do close, and then these sellers who are a good chunk of them are speculative buyers, decide that they want to resell the unit, then obviously they'll have to put it back on the MLS. That's probably where we'll see some more listings, and that could impact the prices.
Steve, how can people contact you?
Best way is probably by email. So it's just my email. It's steve@stevesaretsky.com, or you can check out my website for some resources there, stevesaretsky.com.
Steve, thanks a lot for chatting with us.
No worries. Thanks for having me on.
My guest has been Steve Saretsky, Vancouver-based realtor at stevesaretsky.com. If you have any questions for Steve, you can send them here at info@housestreet.com or to steve@stevesaretsky.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.